Thank you for joining us today for another episode of Issuer Insights, brought to you by ETF Market Canada, where we invite industry experts to share their insights about the world, investing, and most importantly, ideas for your portfolio. I'm extremely pleased to be joined by Liz Bouthillier, Senior Vice President of Sales with Franklin Templeton. Liz, thanks for being with us.
Tanya, it's such a pleasure to be here. Thank you.
Great to finally meet. So, really looking forward to our discussion today. And I thought maybe we could begin by having you tell us about FMID and explaining why it's such a timely product.
Yes, absolutely. So this is our Franklin U.S. Midcap Multifactor Index ETF. And so what it essentially does is provides investors with exposure to midcap names using factors. And so the factors that carry the heaviest weight would be quality and value. Now, quality is important, particularly in this market, in that it offers higher performance but with lower volatility. And value is important because it allows investors to pursue some of the undervalued opportunities in companies in U.S. equity markets. And I think it's interesting because if you look at mid-cap performance, historically speaking, it's offered better historical performance than its small and large cap counterparts. And if we look at valuations now, despite some of the volatility that we've seen in markets, mid-caps present more attractive valuations. And so we believe a mid-cap strategy like ours offers the best of both worlds, and that these companies are large enough to be reliable and that they have more complex business models and easier access to capital, but also small enough to offer some really compelling and attractive earnings growth potential.
Excellent. So maybe just zeroing in on that a little bit further, what would make FMID stand out in the market?
Yeah, I think that's a great question because, it's a very competitive market out there. And I think what really allows this strategy to stand out is that it's an all-weather strategy. And so by that, I mean, a lot of our peers, particularly in the mid-cap space, are growthier, definitely higher exposure to growth names. As we know, those can be great in certain market conditions, not so great in other market conditions. And our strategy is really more core. And by being more core, that offers reduced market volatility. Essentially, it offers just a better, smoother experience for investors. And I think I would be remiss if I didn't mention this is really attractively priced at 30 basis points. So certainly a compelling strategy, particular segment of the market that's really well positioned for what's taking place in the markets, which is essentially a broadening out of markets. So certainly an interesting time to be looking at mid caps.
Yeah, definitely an interesting time given the state of the markets. Speaking of that, why should investors consider adding this to their portfolio or their watch list now? And how have you seen investors use this strategy in other markets?
Well, that's a really good question because we do have this strategy in the US and it's been a number of years.
Okay.
It's got a great, strong track record. It's certainly resonated with investors. And that's essentially why we brought it to Canada. And so, how we've seen investors use this strategy is really, I'd say, first and foremost, it's to manage some of the concentration risk they're facing. I mean, if you look at the S&P 500 in 2014, the top 10 positions in that index accounted for about 18% of the index. And now, if you look at the end of 2024, the top 10 positions of the S&P 500 accounted for, I think, 37 or 38% of the index. And so there is a degree of concentration out there that we have not seen in many, many years. And we know that clients really have skewed, if you look at industry flows, to larger cap type strategies. And so inevitably, as a result, they face some degree of concentration risk. And so we've seen investors partner a mid-cap strategy to some of the more traditional large cap, mega cap names. And this has offered reduced volatility, but also, again, reaping the rewards of what we're seeing in the market, which is a broadening out of the market. And so as we see less degrees of concentration, we see these mid-cap names tend to outperform. And so I think that's essentially where we've seen the most traction with advisors and investors really looking to manage that concentration risk. And again, a mid-cap strategy offers really better risk reward profile with lower valuations, similar growth profiles to some of the larger cap names. And another interesting aspect of this type of strategy or the companies that we own in this strategy are that a lot of their revenue are more domestically driven, which can be an interesting way to hedge against some of the tariff risk and tariff volatility that we're seeing in the market. So I think essentially, given that this is a part of the market that reaps the reward of broadening out, I think the fact that it's more core, meaning it performs well in all weather conditions, and that it's attractively priced at 30 basis points with the long track record that we can point to in the US makes for a really compelling opportunity. And I'd certainly propose that our FMID strategy is one that investors and advisors should be considering, particularly now.
Absolutely. Well, thanks for that clarity and update to our audience. Thank you so much for joining us today for another episode of Insights brought to you by ETF Market Canada, which is of course sponsored by Franklin Templeton Investments. The ticker is FMID, FMID. And if you're interested, please be sure to check out their website at franklintempleton.ca. Liz, thanks so much for being with us. This is a really important tool for today's markets, and we're really grateful that you shared your time with us.
Tanya, it was a pleasure. Thank you so much for your time today as well. Have a great afternoon.